Most Americans do not have $1,000 in their bank account right now to protect them from an emergency. Now, there's a lot of reasons for this, but if I can point out one thing that's holding back so many people from ever becoming wealthy, it's your car. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com and welcome to The Minority Mindset. You might think that you're the one driving your car, but in reality, for a lot of Americans, your car is the one driving you. I want to start by going over the real cost of your car. So the average new car payment in America is $554 a month. This is how much people are paying for a new car right now in America, and the average lease payment for a car is $487 a month. So I want to be conservative, so I'm going to do all the examples assuming we go with this lower amount. This $487 a month for a car. So you have the average person in America making something like a $487 monthly payment on their car, which will get you something like a $27,000 car. But the interesting thing about this car payment is your car is a triple threat. You are paying interest on a car which you have to pay to maintain every single year, which depreciates in value. What that means is, yeah, you bought this car as a $27,000 car today, but when it comes time for you to sell this car, you're not going to get anywhere near $27,000. Cars are liabilities. What that means is the longer you own it and the more you drive it, the less your car is going to be worth. You can compare that to something like a stock or a house, which are assets, where in general, the longer you own this thing, the more it's going to be worth. Cars, on the other hand, just take money out of your pocket every single month because you have to pay interest, you have to keep paying money to maintain it, and this car is losing value every single day. So you're paying $487 a month and you're getting a car with a heated steering wheel. That's pretty cool. But if you took that same $487 a month and you invested this money into, let's say, a low-cost index fund that was paying a 7% annual return. So this is not something super aggressive. We're talking about an average 7% return a year. After 5 years, this $487 monthly investment at the 7% return would grow to $36,000, while the value of your car would come down to $11,000. So after 5 years, this is what your money would look like. Your investment would have been $36,000, but you wanted a heated steering wheel, and so your car is only worth $11,000. So this is what you get if you invest your money, and this is what you get when you want heated seats. Now, let's keep going with this. Let's say you do this for 10 years. So after 10 years, your investments won't be worth $36,000. They'd be worth about $87,000, assuming you get the same return. And your car and your heated steering wheel would be worth about $4,500. If you do this for 40 years, now, so 40 years, your investments would be worth over $1.2 million, and your car would be worthless. And by this time, who knows what's going to be out? Heated steering wheels might not be a thing then. You might have some chip in your hands that keep your hands warm. If you have $500 to put towards your heated steering wheel every single month, but you don't have $500 to put towards your investments, something is wrong. And at this point, you're probably thinking, but Jaspreet, how am I supposed to get to and from work? Hold that thought. I'm going to get to that in just a minute. But when we posted this concept on Instagram, where we said if you invest $400 a month and get a 7% return, you will be a millionaire in 40 years, we got two kinds of responses. The first kinds of people said, oh, I don't want to wait until I'm 40 years old to become a millionaire. And the second people said, where am I supposed to invest an extra $400 a month, Jaspreet? Let me start by answering the first part. But before I do that, I need you to do me a quick favor and smash that thumbs up button below, because at this point, a lot of people are getting triggered and probably smashing that thumbs down button. So if you want to help balance that out, help me by smashing that thumbs up button below. If you're given two choices, you can either be a millionaire today or you can be a millionaire when you're 70. I would pick being a millionaire today. Who wouldn't? But the problem is the majority of people are broke today, and they're going to continue to be broke or just above broke when they're 70. Baby boomers are in their mid-50s and mid-70s right now, and many baby boomers do not have any money saved for retirement. and if they do have money, it's nowhere near what they need to retire and live financially free, or even something remotely close to financially free. So yeah, maybe you don't want to wait 40 years to be a millionaire, but in my opinion, now I know I'm just a random guy on YouTube, so what do I know, but in my opinion, I would rather be broke now and rich later instead of broke now and broke later. If I can't be a millionaire tomorrow, I'd rather be broke forever. By the way, if you're really concerned about waiting 40 years to build this type of wealth, you don't have to wait 40 years. There's other things you can do, and I'm going to be talking about that in just a minute. Second, people kept talking about how they didn't have $400 to invest in building wealth in their future. Yet, you have $400 to invest into a heated steering wheel every single month, which is a money trap, which is keeping you broke, which is keeping you from becoming wealthy. And actually, the average person is paying a whole lot more than $400 a month, especially when you start adding in upgrades and premium gas and insurance. You're already spending this money. The issue is right now, this money is going into somebody else's pocket and it's making somebody else rich. It is not making you rich. So what I want you to do right now is shift where this money is going and put it into your own pockets. That way you can make yourself rich first. That way you can buy your dream car and not worry about the price. Car companies spend $35 billion a year to sell you the idea that if you drive a nice car, you're gonna have a great life, you're gonna have an awesome family, and your neighbors are gonna be jealous of you. But what they don't tell you is the real cost of your car, because the cost of your car isn't just $400 or $500 a month. The real cost of your car is your future wealth. I'm not saying don't own a car or don't drive a nice car. I want you to drive a super car. I want you to drive that luxury car. I want you to drive something nice, but I want you to be able to afford it first. That way you don't gotta worry about the price, and that way you're not sacrificing your future freedom. You need a car. I get it. What I'm saying is, do you really need a car that's costing you $400 or $500 a month? What I'd rather have you do is go out and buy a used but good working condition car with cash. That way you don't gotta worry about the monthly payments, and now you got a car that takes you from where you gotta go, and you got the extra cash in your pocket that can build your wealth. Leasing is almost never the smart financial decision, so leasing should be completely out of the question unless you are worth at least $1 million. Financing is never the smart financial decision when it comes to buying a car, because when you finance, you're paying interest to own a depreciating liability. Cars don't make money, they lose you money. And if you have to pay interest to buy something that is losing your money, you're losing money twice. You're losing money in the value of the liability because the car value is going down, and you're losing money by paying interest to own something that is losing you money. Buy used, use your extra cash to build wealth, and now when you have this wealth, go out and buy whatever car you want. It doesn't matter, because now you can afford it and the price doesn't even matter to you. Earlier in this video, I talked about how you can build this wealth faster than waiting 40 years to do that. Now, we talk a lot about this on our website, theminoritymindset.com, and I will also link an article for you up here and in the description below. But there's two things you can do to amplify this process. You can either invest more aggressively, that means put in more than $487 a month, or you can grow your money faster. If we're talking about investing more money, then you can either cut more expenses, that way you have more money to spend, or you can raise your income. That could mean looking for a new job, or asking for a raise, or getting a promotion. If you have more money, then you could put more money towards the investments. That way you can build your wealth faster. Or the alternative is growing your money faster than 7% a year. I said this 7% a year because this is a completely passive investment. If you went out and you threw your money into a low-cost index fund, which is a fund that gives you exposure to the stock market, now you're not doing anything. You're just throwing your money into this fund and you're letting the stock market do its thing. This is where people say, oh, where are you ever going to see a consistent 7% return on your money every single year? And yeah, you're right. You might not see a 7% return every single year. One year you might see 4%, one year you might see 5%, one year you might see negative 2%, but other years you might see 8%, 9%, 10%. And so over the long run, this is what we've seen on average in the stock market. If you want to beat the 7% return, it's very possible, but it's not going to be as passive. This is a passive investment where you're just throwing your money into something and then you're walking away and you don't do anything and you just let your money grow. If you now invest your time along with your money, you can grow your money a whole lot faster. There's a few different ways you can do that to get the better returns. One way is to be more active in the market. So now you're trying to find growth companies and you're actively trading them. That way you can get a better return. It comes with more risk, but it also comes with the opportunity to make a better return. Or the alternative to that is you can start your own side hustle, because now you're investing your money and your time into this thing, the side hustle, that can grow way faster than 7% a year. If you took $1,000 and you went out and you started a side hustle, the side business, there's a chance that you can make the $1,000 back within 6 months. That's way better than a 7% return. And if you continue to grow it, that $1,000 investment that you put into your side hustle could become a $1,000 a month return, or it could be a $1,000 a week return. That is way higher than a 7% annual return with a passive investment. Now again, starting your own side hustle, starting your own business comes with risk and you can fail. But if you really want to amplify your wealth, there's only two ways to do it. You can either grow your money faster or invest more money. If you want to invest more money, you need to have more money. And if you want to grow your money faster, you got to take more calculated risks. Everybody says they want to be wealthy with their mouths, but the real question is, how bad do you want it? What are you willing to do to make it happen? If you're not willing to take the risks or make the sacrifices, I'm sorry, it's never going to happen. If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. If that happens, I'm going to make $1,000. And if the stock goes up to $1, I'm gonna have $25,000 doing nothing. And the next thing you know, your money's gone because that stock went out of business.